Not interesting. Well, let's find out what is interesting to you. We've got your pro picks. Pro Picks is brought to you by ATB Financial. With $62 billion in assets, ATB Financial is powering possibilities for more than 820,000 financial services clients in Alberta and beyond. ATB's capital markets arm is a full-service investment dealer that offers investment and corporate banking, sales and trading, institutional research, and risk management. Visit atb.com/inthemoney for more information. Your first pro pick is Total Energy Services. So you're not into oil and gas stocks, but you do have a services company in Total Energy. Why do you like it?
Yeah. So I'm not bullish on oil, but I'm bullish on LNG in the world. So U.S. has, been a huge winner. U.S. is now above 20 BCF of exports per day, and they're going to 30. Canada, we're right now, 2 months ago, I would have said 0, but now we're at roughly 2 BCF a day run rates, and hopefully we're going to 4 and above. So that's why I'm bullish. Natural gas and Total has compression, and because of LNG Canada, the drilling aspect in Canada is very, very, very busy for the gas side, and hopefully we get even more news. Therefore, it could be for years and years to come. And then they also have their Australian business, which is also LNG. And they just bought a business a year ago, roughly, at 2 times EBITDA. They got a few more contracts after buying that business. So very, very, very good business, very, very stable. So the stock trades between 2 and 3 times EBITDA.
So how much of that LNG future do you think is baked into the stock? Because I'm looking at it, I guess over the last couple of months, it's up 20%, but it's still below where it was at the end of last year. So it's not like it's gone on to make new highs, even though, as you said, Canada's started to, ship LNG from that big terminal. Yeah.
On the service side, it's not really baked into it. Like partially is nobody's really interested in smaller cap names, as you know. Tourmaline is, benefit from LNG. Tourmaline has been a very successful stocks. People know that they benefit from LNG, but I don't think investors, generally speaking, have gone down market cap. Their Source, which one of your guests mentioned at one point, also is a beneficiary of that as well. So I don't think it's in the stock at all. And we need LNG. Maybe people don't understand, but I think they understand more now, because if you go back just a few years, everybody was just talking, climate change, and all we need is wind energy and solar energy and no gas. Gas is bad, nuclear is bad. But with the AI stuff now, everybody understands that we're going to be short energy. And the only way to ramp up electricity production very fast, the only way right now is natural gas. So natural gas is going to be...
Which doesn't have emissions when it's being used.
Oh, there is, but there are ways to lower it. But it's 50% coal. So right off the bat, if the world would just get rid of coal and replace natural gas as a first step. But in the shorter term, if you want to ramp up electricity, you could say for the next 20 years, we're going to go big on LNG, natural gas for electricity. And then longer term, nuclear, which is really probably one of the best. I mean, there's no emission.
What do you think it means for the stock? So trading at around $10, $11 per share right now, like what's your forecast on where you see it going, or what it should be worth with LNG baked in?
Yeah. I mean, imagine over time that we go to 4, depends on where we go, 4, 6, hopefully even 10 BCF 10 years from now. So a lot more production. I mean, the CEO of Strathcona mentioned they want doubling of oil and gas production in Canada. That is bullish across the board for Canadian producers and service companies. So, I mean, if you just run, let's say, a multiple, the 10, the earnings are expected to be roughly $2 over time. If they double their business, let's say 5 years, maybe 7 years, 8 years, and therefore $4 of earnings, that's $40 in 5 to 10 years. Right?
Okay, thank you for giving me the number instead of making me do the math myself.
But it's definitely not a certainty. People are so bearish on small cap, but there's definitely in the realm of possibilities.
And I guess half of the small cap game is just awareness, like getting to $1 billion market cap, and then getting on more and more people's radar and discovering the story, I guess, before that happens? Is that kind of how you find it goes?
Yeah, sometimes for the hot stores, for sure, if you're early in finding out. But this is a well-established company. The company has been public at least since 1999.
But only $400 million market cap.
Yeah.
So
it's still $1 billion of sales. It's not a small company.
That's what I mean. Yeah, like really under the radar. Okay, speaking of under the radar, your second pick is Calian Group. Did I pronounce that right?
Yeah, I pronounce it Calian. I think
Calian, okay.
Yeah.
Calian Group. Tell me what it does. Let's get our head around what it does, and then we can talk about why you like it.
Yeah. This company, has been around for a long, long time. They have kind of three divisions. They have base stations for like talk to satellites. So if somebody needs to, we're talking 20 years ago, they needed to build these big base stations to get the signals. And some of these technologies still need these things, but it's smaller and it's more sophisticated now. They have staffing business. So basically for either the military, because they do a lot of defense, that's really my angle why I like the stock, and for other industries. And they do also computer IT, like mini CGI for a certain type of clients. So they have those three. But the kicker is really the military. They have a lot of contracts with the Canadian military, staffing, for example, training, certain type of training they do for people inside the military. And we know now Canada will increase substantially our spending. So Calian, indirectly or directly, will benefit over the next year or two.
The ticker is CGY for those that are researching it. And didn't it just get a big contract or another big contract with the Canadian military? Did that kind of embolden your thesis?
Well, they announce contracts regularly, right? That's they need to get contracts. But Carney said we're going to go from 1% to 3%. Is it even 5% down the road? So imagine if, let's say it's 3% from 1, that's a triple of what like roughly Calian, there's a good chance that we'll get the same ratio. So 3 times bigger in terms of their military business. And the stock trades around 10 times earnings, free cash flow, no debt or very little debt.
I mean, I don't really see that show up in the stock. Like it moved like everything moved. It bottomed out in May and it's up from there, but it just hasn't really broken out much above $50 per share. That seems to be a stubborn lid, like $52, $53 per share. Why don't you think, like, everybody must be looking for ways to play on this higher defense spending? We know they are in Europe. Why don't you think Calian has seen that kind of benefit in its stock?
Well, it's a small cap effect again, but also the last couple of quarters, they're disappointed. So some of the people that were involved in the stock got very disappointed, and some of them sold the stock, and the stock got into pressure. And you can definitely see by the chart that there's no momentum here. So momentum is popular these days. And so if they get the momentum going in the next few quarters, hopefully the stock goes a lot higher.
They've also got exposure, though, to the U.S. Is that right? And I think that's been a source of anxiety as well. Like, are they going to be able to win deals there? And with the U.S. maybe pulling back on spending, is that a headwind? Like, how much of a headwind is that relative to them being able to get more contracts in Canada?
Yeah, well, I definitely bet on Canada first. But their assets in the U.S. are, staffed by it's U.S. people, salespeople, or U.S. people. And the disappointment last quarter, a lot of that actually came from the U.S.
Yeah.
So, but because the stock is already at 10 times earnings, I'm not too worried, because you're already not paying for anything really that could come up here near term.
Okay, your third pick is a REIT. We teased this throughout the show. It's H&R REIT, which similar to InterRent, there's an activist, K2, a big hedge fund in Canada, agitating for more disclosure around who are you involved with in this kind of sales process. H&R disclosed that it's in the process of doing strategic alternatives, and reports say that Blackstone and others are sort of kicking the tires. When did you get involved in H&R, and what's exciting to you here?
Yeah, Blackstone, it's more than kicking the tires. My understanding is they made a full formal offer, or at least a formal official letter saying they're very, very interested. And personally, why I think like most shareholders involved here, they want to sell the company, all of it, either as a one piece or different pieces. It doesn't matter. But most shareholders want the management and the board to maximize value here, whatever the value is. I don't know. Some people say 15. Some people say as high as 17. Maybe it's even less than 15.
It's trading at 12 now, just for context.
Maybe it's 13. I mean, maybe it's worse than we expect. But because the willingness of basically most shareholders that I'm aware of want to sell, I think it's going to happen. And but if it doesn't happen, there's maybe a little bit of downside here. But I'd say the odds of something happening is high because of the willingness of the shareholders.
So it's interesting. You don't like to get involved in M&A or M&A as a thesis, but it sounds like real estate maybe is a bit of an exception, or help me reconcile those two thoughts.
Yeah, on this one, I would say my conviction is most shareholders want to sell. And if management or the board do something not to sell, you'll probably have activists getting harder, like going harder at them. And eventually I believe it will get sold.
H&R is pretty diversified, or more diversified. Like, it's not just like pure office or pure retailer. Like, it's got a bunch of things in there. Does that create, well, I guess on one hand, more opportunity, like you could sell off little chunks, but it also could be just a little bit more time consuming. It might not be just a nice, clean premium offer.
100%. That's why it was a lot cheaper. But yes, they are in 4 sectors. It's, for example, retail, office. Part of it is office, apartments, which is probably good. And then they got the industrial, which is very good as well. So it's the office that people don't know, because some of the offices that they own are, maybe the outlook is not very good. So.
All right, JF, it has been an absolute pleasure. Thank you so much for joining me in studio.